Hello and welcome to the Wednesday check-in presented by the Goxstein News Network. Today is October 22nd, 2025, and I'm your host, Landy, and we're looking at Bitcoin on the daily. And, well, we got a lower high on Bitcoin now, at least on a swing. We'll take a look at the close. I think it's right on the edge of being a closing lower high as well. It swung right into some of the key areas that we've talked about to the upside after, kind of taking a look at price action on Monday. Looking at the Monday closure while the Tuesday session was open after close Monday, we talked about liquidity levels and kind of giving a breakdown of what this is tracking over here. The color coded bars over here are essentially just to kind of revisit that real quick. Daily and weekly levels of untapped liquidity. And I got a lot of great questions about that. But first, I want to talk about the daily structure, and then I'm going to give you a little bit of a breakdown of this as well, as there was some really good questions that I got in various group chats and on that video. So, look, Bitcoin, this is another lower high. It rallied right into resistance around 114. Again, there was a big daily level of resistance overhead that we've seen act as daily resistance right around the 113.5 here. And that is something that I noted between there and around the 114.750, which is the swing low over here, is kind of the main area above the weekly. So it's kind of like a swing fail area. And that's exactly what we saw here was a swing fail above the weekly there. And we have two weeklies on top of each other. But one of the main things to kind of pay attention to is if we do see Bitcoin trade back above here, well, this is going to be the lower high, the lower high to beat. And that's going to be around 114. But then it's like right back into overhead resistance between 116 and 118. And but in terms of structure, right now this is this is the downtrend break now. We can actually look. I think most indicators. No, they didn't fire off. I think it might have closed just above the Tuesday low. It did. So 107.444. The close came in at 107.585. So yeah, just narrowly avoiding the closing lower high, but it did put in a very strong rejection on a swing high. And I talked a bit about this, like what are we looking for? There's a couple of scenarios that I floated that was, on the way up, if Bitcoin could make it, which I did think was a little less likely, was to come off the low here and then go straight up and break the lower high just above at 116, right? And then that's the downtrend break. And then we look for a higher low, equal low structure from there. Well, we got the lower high. And what we can look for off of a lower high for the potential bullish setup side of things is a higher low. And that would be a closing higher low preferably, right? So something like, maybe bottoming here and then putting in a higher low and then getting above this last lower high, which is right there at 114, right? That would be a trend reversal setup on any closing structure that puts in a higher low or equal low relative to the last lower low swing. Now, I will caution you that if we see a close, a higher low swing structure, but a closing lower low, just be cautious. Be very, very cautious. Right, that's kind of like we got the lower low swing with the higher low close over here. If we get a higher low swing with a lower low close, just be cautious. It's still a trend reversal setup, technically speaking, in terms of the overall swing trend. But anywhere really above this low at 103.5 essentially is where we would want to see on the bullish side a trend reversal setup from here. And that means that the criteria is that Bitcoin stays closing above, that 103.5. If it swings below and closes above, there's still a chance that it could set up, but that would be in lower low territory. But any kind of higher low or equal low as it relates to that 103.5 would be the trend reversal setup on a close. Typically, a 3 candle close is preferred. But even if it was to extend and go sideways and then close it up as a closing low structure, as a closing higher low structure with a higher low swing, then we look for the trend break, right? That's the trend reversal to trend break. And then we can look for higher prices. Now, that's the swing structure, and just, updating kind of where we are. One of the scenarios, of course, I gave both scenarios: break above this high, that's a trend break, or put in a lower high and then try for a higher low. Well, what's the other scenario? The other scenario is that we just get continuation of this downtrend, which is, just gonna obviously look like this, right? And that would be breaking below the low and going for, the lower second. We're going to talk about this in a moment. That's right in the big weekly area down there between 101 and 98,225 on spot. So essentially $98,000 to $101,000. You got a lot of people calling for $100,000. Usually when you get a lot of people calling for something, it doesn't necessarily play out that way, or it takes, a different path to get there. But, it is a key area to watch if we get continuation past the low here at 103.5, is essentially 101 to 98. There's even bigger areas of interest to the downside, but I wanted to address some of the questions about liquidity levels, because this is untapped liquidity. And we can see that price has been all over the place here. And realistically, on the way up, all of these were different, right? You had the highs over here were untapped liquidity on the way down, and every single high that was put in on the way down was tapping into the low side liquidity that was previously untapped. And then on the way back up, we're now tapping that liquidity and then coming back down and tapping the liquidity from this move. So it's a move by move basis. So this is on the current move. Anything below the current consolidation structure is from the move up. And I'm going to illustrate this by pulling some volume, so or some volume areas of interest. And I think I already put it on the chart. I'll take a look. But essentially all of this liquidity that we see down below the range here is from the moves up, the most recent moves up, and that have not been revisited. Just like the most recent moves down, including this last lower high over here at 114. Well, this is all liquidity that has yet to be tapped back to the upside, right? All the way to the highs. And then, of course, it's free real estate above there. So I'm going to go ahead and take off really quick and just kind of make a point here about kind of what this looks like. Yeah, fixed range volume utility. I did put it on here. So this is what we're going to look at here. This is essentially the most traded prices and a volume profile for the traded price, like how much volume was put on at specific price points within defined ranges. And you'll see that what I'm doing is I'm taking the move off the low all the way to the current move here. And the reason why I'm doing that, and this is, everybody's going to have a different way of doing this, but the reason why I'm doing that is because it fits with what we're talking about with liquidity levels here, right? So this is off of the move off of the lower lows from the prior range here. This is the 74,420.69 low on spot price. This is also the last monthly higher low swing. Of course, we have the close up here at around... for the weekly, I think it's somewhere around the 82.5 or so. So it's somewhere up here in this consolidation, if I remember correctly. And, this, was not revisited. We haven't revisited all of this. We came back down to revisit some of this move on the way up, and then we get more untapped liquidity on the way up, and then we tap that liquidity on the way back down, right? So I wanted to kind of point this out because Bitcoin just bounced off of what's known as a value area low. And that's right at the 103.5 level, which is also a major Fibonacci level of 1272, which is 27.2% above the prior cycle's, high to low, 69 to 15.5 here on spot. So just to kind of illustrate that real quick here, and this is log scale. This is not linear. But I did want to just kind of point that out, that there's a confluent area that just so happens to be the value area low and is also right on a major Fibonacci level of interest, or 27.2% above $69,000. Just tap that. That's also the value area low of this most recent move off of the last macro low. So We can also see another interesting thing here is we have this red line. This is the most volume traded price in this range here. And this is right on the low side of this original consolidation structure. So we have 112, which was essentially, after breaking the 109,360 here. We saw, we saw the big downtrend off of 109,360 to 74,420.69. And then we saw price rally up to 109 and then come back into essentially this range over here. And then rally above the 112 here to make the new highs, right? Well, this area is pretty high volume, even from the move up. So we're in the thick of the volume. So we have the value area high, where essentially it's enveloping the most amount of volume from this move has been put in this area, essentially between 103.5 to the high side here around $120,000. And of course, it's going to be confluent with all of those major areas of interest that I've been talking about in terms of the highs and low structure for our areas of interest for liquidity to the upside and downside when looking at support and resistance. And you can see that the point of control is right there at a major area that we saw Bitcoin reject from, which is the bottom side closes of this. So really the close on the top side of this original consolidation to the bottom side, this is called the point of control. This is the most volume traded area at 118 or so, just below 118 and 117.7. And we're just looking at this as confluence, as another view of what's been going on. And now, of course, we're below the point of control. We're down near that value area low. And, that doesn't mean that we can't sweep it and pop back up, break the downtrend, and then start an uptrend again. That can absolutely happen. As it stands right now, what I'm looking for from the bulls is to see if they can hold this last low at the value area low. And then put in a trend reversal setup with a higher low and then break the downtrend above 116. That would start to look like Bitcoin wants to, come back up to, again, 118, and then above there, 120 to 123, and then above there, the highs. And then the shorts have to do a lot of readjusting above that 123. They really don't have too much cover. They can still build, but they just have to build at higher prices to hedge whatever kind of spot position they have. Because in this market, the most of the volume is being driven by the spot ETFs. And what do? They hedge on the other side on CME. And then they let the spot side unwind and ride the short side down and then rebuild the spot side of the trade and push things back up. And of course, you also have treasury companies doing a lot of the spot buying as well. Now, one of the big things that I wanted to note here is I'm taking this from the moves off the macro lows. And we've seen since Bitcoin entered a bull market, and I didn't take this one, which I should have, which is just kind of, I think it's more relevant. This is a little deep down there. We can always revisit this if we enter a bear market. But when looking at the untapped liquidity and then the mean reversion back, and then the untapped liquidity on the way up, and then the mean reversion back, and the same thing for this move, same thing for this move, same thing for this move, right? So we've got 3 drives to the upside. It's technically 4 off the lows. Some people are looking for 5, by the way. So that of course is going to fall into some schools of technical analysis like Elliott wave. Some are already like, no, we're in our wave 5, we're going to go, or this was the wave 5 and we're done. And there's a lot of conjecture. There's always a different perspective, even in the same schools of technical analysis. But in this case, I don't really care about that because we're looking at something pretty specific here. But I want to note here is there was a lot of volume right around a key area here, right around $95,000 to $96,000. This was the point of control of the prior range. And it was also the point of control of the entire move up. And you can see how the volume profile just below 98,225, which of course is right in that 101 to 98,225 region. We find that there is a very high volume area. We see where price kind of stalled out there on the way back up to test, put in a higher low right around 94 to 96, right below the POC there, and then rallied up to the highs and then came back, tested the high side of the volume profile structure over here, and then rallied to new highs. So we're kind of right in the thick of it, although we have right now, we're below that point of control, and the point of control is right around the current highs. And, we saw the same kind of scenario over here before dumping out and then coming back to it. This has been this is just a range bound move on the downside here. And I know a lot of people are freaking out because they're afraid it's going to break down further, but there's a lot of bidding volume that came in here. You also see that right around $88,000 to $89,000, we put in a low, which is a macro fib level. We also put in a lower high there before searching down and trying for the top side of the liquidity over here, stalling out right on a little bit of a daily cluster of volume here after the breakout of 73,835 over here, which was the all-time high prior to the halving, which was a character change for Bitcoin. Same deal for this. We saw that a lot of high volume near the highs. You drop the lows and the value area low. We didn't do it over here, and we haven't done it over here thus far. But after putting in the all-time high, we came down to a big monthly level, and the spot ETF open high was at 49. We came and retested that. You see that there was also a high volume node right here, and then we saw more volume coming in as it approached this little high volume node over here of price action, and then up and away. So essentially with all of this downside liquidity is from the moves up, right? And each of those moves up. This doesn't mean that it's all going to get taken, right? Like, I mean, if that was the case, then we have to pull the entire structure. You're looking at liquidity all the way to zero. It's just not feasible. I know that people, maybe Peter Schiff or what's the other guy who thinks Bitcoin's going to zero because he knew Satoshi and whatever. Oh man, now I can't remember his name, and I know exactly who he is. But I just kind of wanted to point that out. So this is from the most relevant move is the last move up when looking at liquidity, and then the last big move down, right? So underside liquidity that hasn't been tapped and overhead liquidity that hasn't been tapped. So, and I will revisit this. Bright green is weekly liquidity. So that's the weekly highs after the weekly closes in. And then the red is also weekly to the downside, so below price action. Yellow is top side daily for me, and orange is the bottom side dailies. So, and you'll get them candle by candle as they get tested. And we talked about this on Monday, like where that liquidity was. We saw it get tapped just above this candle here that was untapped from this move down. And now there's some areas of liquidity that are very attractive to go and grab. Yesterday's low, the low swing below the close here, and then of course the big weekly down there at 103.5 right at the value area low, and then just above yesterday's high at 109 essentially, and then all the way back up to the Tuesday candle high at 114. Then we have 115. And 116 above there. And then it's kind of a straight shot right around $122,000, the big top side of the candle, the big dump off candle that liquidated about $15 billion in the market. So wanted to kind of cover that so that everybody's got a good idea of what we're looking at here and understands kind of what this means, what these color coded areas mean. Look, price can go anywhere. It's all about defining the criteria for what's going to happen next and what the trend is and how things might change. And when looking at the current area of interest, I mentioned this last week and I believe even the week before. We have a weekly close. And this was so we have a weekly high side structure closing high. In fact, it was closed on the closing high at 109 over here. So 109 to 112. This closing high was locked in on the candle that put in the actual closing high or low on the weekly. So this is this resulted in a fairly nice rally, of course, off the 98,225 with the close open coming in there at 101 to our 123 and then essentially 125.26 area, which is basically what we were looking for. I mean, the next big area above there is 128 to 130. which is still viable for the bulls to go and hit on the weekly, by the way. And we're kind of whipsawing in a broadening wedge here. And in this case, we have a higher high weekly, and then we have a higher low weekly. Yes, the swing trend was down, but this is a complex high close and a complex higher low close. And realistically, the bulls need to hold this zone on a closing basis, 107.250 to 112. Start to lose that, not only are we looking to come back and test some of the daily liquidity around 104 to 106 down to that big fib level, which for some reason I keep not adding the fib back here at the 1272. But it's going to start to look like if it closes below here, not only is it going to test these areas and retest this low, but it's very highly likely going to hunt the liquidity down here at that 101 to 98. So it's something to watch for the rest of the week. I'll revisit it on Friday. You want to see closes back above, for the weekly, it would look a lot better on closes back above 112 for the bulls to have a chance to go and run some of the dailies at 113.5 to the 114.750 up here, and then start to get into the thick of the resistance up here at 116 to 118, and then eventually go on a run to test that area around 120. You can call it 119.5 if you'd like. Essentially a 120 to 121, and then above there 123 to 125, and then try to push the shorts and make them readjust and possibly go and hit some of the fib levels overhead. That, of course, being the big 128 to 130 up there. And preferably see closes above there, right? When looking at expansion and contraction areas of interest, we have the upper bands. Upper second is right there at, essentially $124,000. And need to close above there and the all-time high now at 126.3 to actually start to kick off expansion to the upside. And bulls need to hold on any kind of failure of structure on the weekly below this area here. Essentially, the line in the sand is that weekly low area, as we see that bears have been able to push it down below 107.250. Then that's where the next big level to watch for is, of course, 102.5 to this weekly, because closing below the lower second would be expansion into this big support area between 101 and 98. Any breakdown below there would be expansion, like actual expansion down into the next big zones. And that's where we can, we can look to the mid 90s, which was the point of control that I showed earlier over here, down to, 90 to 89, possibly even 88 down here, that major fib level where we saw this lower high come in. That would be initially the outlook, and that would be on an expansive move to the downside, hitting all of those areas of support level by level from the daily perspective, more than likely. But the bulls have a chance as long as they are closing above this higher low weekly and especially above the higher high weekly at 112. They have a chance to re-enter this range, fish for liquidity, and maybe even push the top side and get some more out of it. And the daily setup is pretty darn clear with this last lower high right at 114. That is where the daily basis band is. And that's, essentially you just need to see higher lows come in. But, the bulls are on the clock. If they start dropping the weekly at 107.250 coming into Sunday, that's just not going to look good. That's going to look like this trend wants to keep continuing down to this lower second area right around 101 to that 98 from the daily perspective, right? So what you want to see is a higher low, equal low structure come in here and take out that 114 high, preferably for the bulls before the end of the week. They can salvage themselves here if they can get closes above that 107.250. Otherwise, it's going to look like it wants to swing down and test for more liquidity down lower. And that's pretty much all I got for you this Wednesday. We're gonna touch on a few things on Friday. We have FOMC rate decisions next week, and we'll likely talk about some of that as well. So I'll give you a clear view of the charts here and the levels. If you'd like to mark them down, you can pause the video. White are the weekly closes, and then purple is the dailies. Yellow's dailies and weeklies and so on and so forth. It's more daily areas of interest than not, but Yep, that's all I got for you today. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Take care.